Hello guys, this is Suman Rao and welcome back to another video. So as the thumbnail suggests, this video is not going to this video is not going to be about any trade that I have took in the past or recently, or not any review of any trades, but instead this video is all about a trade which I executed, but again I exited the trade like with a break even amount. And if I would have waited, and if I would have acted with patience, and if I would have managed my risk properly, then you know that trade would be very successful. So without wasting any time, let's get back. Let me explain you what happened recently in today's trading sessions. So this is, I guess, today is my history, pretty much in plus. This is the all the trade. This is all the trades today. Yeah, 15. Today is 15th. I'm recording in 16th October, 12 o'clock, 12 a.m. But these were the past trades in 15th October, recent trades, like in the today's trading sessions. So pretty much, we closed at a very positive amount. But you can see here the first trade, the very first trade of 15th October. I have exited here with -$8, as you can see here, so pretty much break even. uh, so I'm going to discuss about this trade, that what happened in the trade. It was in Euro USD, as you can see here, Euro USD, and it was at the buy direction. um, Let me show you. Yeah, this is the trade. This is this again, let me tell you guys that this trade I have, I didn't capture this move, and the reason behind also I will tell you why I was underconfident. So the trade actually was fitting my game plan. First, when I watched the 1 hour time frame, and when the price was here, I was little underconfident that it will be a counter trend trade, because I have entered just here, just here. Forget this movements, you forget. Just imagine price is going being just imagine that price is here, and you have entered in a buy direction. And as you can see, the overall trend is bearish. you know Overall trend is bearish, and but I have entered just here. So it is basically a counter trend trade, means the trade which is against the trend, the underlying trend. We can clearly see here that there is a very bullish trend is going on, and there are little retracements like here and here, and this is a very big retracement, by the way. This was the very very big retracement, and I was hoping, like, I was not hoping, I was anticipating the price to cover this clean range over here up till here. And when I entered this trade, my open price was this, as you can see here. Yeah, let me show you exactly where are the arrows. As you can see here, this red arrow denotes that I have exited the trade, but behind that you can see blue arrows which indicate, like, it's very very I don't think that you can see it, but yeah, if you will focus a little bit, that you can see the blue arrow. So the blue arrow denotes that the order was executed on that spot. So when I executed this order, my prime focus was on 30 minutes time frame, because in 30 minutes time frame, yeah, in 30 minutes time frame, the trade was completely supporting my, you know, the game plan. Because here, there is let me draw the here the price was ranging over here, and this is the ranging zone in which the price was ranging. So if it would have broke out the downside, then it will be continue pushing down, and there is actually no clean range on the left hand side to price to move down. But again the things become that where I will be putting my take profit, and where will, okay, stop loss I can put in a particular place, but where is my take profit, where I am going to keep it? So I have to watch the trade against and again and again. But here, when it broke upside, my take profit was fixed that, yeah, like, market is going to cover this clean range, and it will cover the clean range, and most probably it will reverse back from this direction right here. And which it did. Yeah, as you can see here from this direction, let me show you how price action beautifully works. From this direction, as you can see, the price gave a little retracement, showing the entry of sellers, the domination of sellers is entering into the market. And let me share you the reason behind why I missed this trade. What was my psychology behind it? The reason I missed this trade, because my risk management was not up to the point. I like was not comfortable with my stop loss. And when I looked at a bigger time frame, let me show you. Yeah, yeah, when I looked at the bigger time frame, my entry point was here below this, the green line ended. Corresponding to that, my entry was here. And when the price was here, and when I looked at the 1 hour time frame, I thought that it is a counter trend trade, so the stop loss can be hit, and there is a higher probability the stop loss can be hit. And okay, if the stop loss, it if the stop loss would have been with a small amount, so I will, like, I would have been more comfortable with it, but the stop loss was around, at that time, many trades were going on, like 2 3 trades also were going on. So this trade, I would have, like, I was uncomfortable with the stop loss, so the stop loss was around 80 to $86 around something, so which I was not comfortable. Like, if you will consider, for a $6,000 account, $80 stop loss is much more than 1% or 1.5%. Like 1% of $6,000 is 60. So per trade you have, if you risk 1%, so the stop loss should be of $60. But my you know amount of stop loss was 80 or $85, which is, yeah, which is not acceptable. It is actually more. So I wasn't comfortable with the stop loss, so I exited the trade. That is one of the reasons. And another reason was, I was not confident about my analysis when I looked at the higher time frames. So before taking on a trade, you have to look at the higher time frames, like the 4 hour, the 1 hour. You can consider. So you should always look at the bigger time frames, because the bigger the time frame, the better is the confirmation in 30 minutes. If you are like a very impatient, or you want to trade smaller time frames, then I would suggest 30 minutes, because 30 minutes, and if you are going with 15, 10, or 5 minutes or 3 minutes, then I think you are doing the wrong thing, because at those things, you know price are not stable, the conditions are very volatile, and there is a higher probability that your stop loss will get hit. So as you can see now, the an opportunity is being created. So let me tell you now how I will take this trade. As you can see that per day, the whole day, euro was bearish. And if you will see the 4 hour time frame, it is still bearish, completely bearish. We'll see the 1 hour time frame. Yeah, it is showing little bit bullish movement, but there is still no confirmation at all. And now 12:41 a.m. in IST time, So time is going on. So New York sessions is going on, no problem. But still, then I'm not confident about this trade, so we will not take this trade. There are certain aspects, there are certain check boxes you have to, you know, fill up so that you can take a trade. Otherwise, blindly taking a trade is just like, you know, jumping from a plane without a parachute. So this was all for the day, guys. So this was the reason that I missed this beautiful trade. As you can see here, it was a very beautiful trade. Let me measure the pips. um, I think some internet issues. Yeah, let me measure the pips. Let me measure the pips. So it was 14.7 pips, approximately 15 pips, which is in Euro USD chart, like it is awesome, covering 15 pips. So okay, no problem. This is like one of the 1,000 trades which I am journaling now. So no problem. This was all for the day, guys, and hope I hope you are after watching this video you will be more confident about your analysis and will analyze the bigger time frames so that you won't be like underconfident like me in this situation that recently happened to me and I missed this big move. So this was all for the day. Thank you. Peace out.